Hi, this is Juliet, a young Orfiano. Welcome to my video. If this is your first time on my channel, please like, share, and subscribe so I can notify you if I have a new video. This is the continuation of part 7 about property, plant, and equipment. I discussed in part 7 about acquisition by issuance of equity securities. Just click above or the link below this video to watch part 7. In this video, I am going to discuss about acquisition by donation. Acquisition by donation. When assets are acquired through donation, the cost principle is modified to produce more satisfactorily asset and income values. Assets received as donation are recorded at their fair values at the time of donation. If the shareholder donates the asset, credit is made to an additional paid-in capital account. If the asset is received from a non-governmental unit other than a shareholder, a revenue or gain is recognized at an amount equal to the fair value of the donated asset. This, in effect, is a donation of cash to the company, and the company subsequently acquires the asset using such donated cash. If the donation is accompanied by restrictions or conditions, the credit should be to a liability account until the restrictions or conditions are fully met. At that time, the liability account should be transferred to income account. If the asset is received from a governmental unit or IAS number 20, accounting for government grants and disclosure of government assistance, the company applies the requirements of PAS or IAS number 20. Government grants shall not be recognized until there is a reasonable assurance that the entity will comply with the conditions attaching to them and the grants will be received. Paragraph number 7, PAS or IAS number 20. Government grants shall be recognized as income over the periods necessary to match them with the related cost, which they are intended to compensate on a systematic basis. They should not be credited directly to shareholders' interest or IAS number 20, paragraph number 12. This indicates that at the time of grant, the asset received as donation from a government unit is credited to a deferred credit account or an earned income from government grant. The initially recorded deferred credit is then recognized as income over the periods necessary to match them with the related cost which they are intended to compensate on a systematic basis. Grants related to depreciable assets are usually recognized as income over the periods and in the proportions in which depreciation on those assets is charged. Grants related to non-depreciable assets may also require the fulfillment of certain obligations and would then be recognized as income over the periods, which bear the cost of meeting the obligations. As an example, a grant of land may be conditional upon the erection of a building on the site, and it may be appropriate to recognize it as income over the life of the building. IAS number 20, paragraph number 17 and number 18. To illustrate accounting for government grants, assume that Cabanatuan City donated a piece of land to ES Transport Services with the condition that ES Transport build a bus terminal in the city and operate transportation system with a road from Cabanatuan to Quezon City. At the time of donation, the land has a fair market value of 8 million pesos. A bus terminal was immediately constructed by EC Transport at a cost of 6 million pesos. The franchise obtained is for 20 years and the terminal has an estimated useful life of 20 years. The company depreciates its property, plant, and equipment using a straight-line basis, salvage value being ignored. The entries for the given transactions are as follows. Debit land for 8 million pesos, credit unearned income from government grant, 8 million pesos, land donated by Cabanatuan City. Debit bus terminal or building for 6 million pesos, credit cash for 6 million pesos, terminal constructed on donated land. At the end of each year, debit depreciation expense, bus terminal, 300,000 pesos. Credit accumulated depreciation, bus terminal, 300,000 pesos. 6 million pesos divided by 20 is equals to 300,000 pesos. Debit unearned income from government grant, 400,000 pesos. Credit income from government grant, 400,000 pesos. 8 million pesos divided by 20 is equals to 400,000 pesos. At each reporting date, any balance of the account unearned income from government grant is shown either as deferred income under the liability section or by deducting the same from the related asset to arrive at the carrying amount of the asset. On the other hand, the balance of the account income from government grant may be alternatively be reported as other income or deducted from the related expense. Thank you for watching my video. I hope you learned something from this video. I did part 9 and continuation of this video wherein I discussed in part 9 about acquisition by self-construction. Just click above or the link below this video to watch part 9. Don't forget to like, share, and subscribe on my channel so I can notify you if I have a new video. Once again, this is Juliet, a young Orfiano. See you on my next video.